Hey guys, welcome back to the channel. Today is November the 13th. It is actually Sunday afternoon, and I wanted to create this video because I know there are a lot of beginner traders out there or new traders that are looking for, a way to get into the markets using a solid strategy that will, enable them to be able to profit nicely in the market. And I'm a scalper, so I use a certain scalping strategy on a daily basis that you guys see me, those that watch the channel, be able to make profit from each and every day. So if you haven't watched some of my live recorded videos or trade sessions, you can go back and watch some of them on the channel here. But yeah, it's a simple scalping strategy that I use daily. And I really want to show, especially if you're a beginner trader or someone that's kind of starting your career or venture, trying to get into day trading, how you can actually use a strategy to kind of grow a small account at the same time. But because I spent a lot of time many years ago trying to learn, in a sense, different strategies, and which just didn't really work out for me. And it wasn't, like I said before, until I bumped up against supply and demand, which is more so a style of trading. And then I kind of created or developed a strategy for me that worked. And it allows me, like I said, to be consistent each and every day. So I'm going to share that with you right now. We'll kind of go over some examples of the actual strategy that I use. I'm not tell you that you have to use it, but I just want to share with you what I use as a daily scalper that allows me to be able to capitalize and profit, when I'm taking my entries or making trade entries in the market. Okay. Now again, I trade the E-mini S&P 500 futures, and this strategy works regardless of the actual market you trade. It's just you have to know how to trade it and be precise with your entries. Okay. So sit back, watch the intro, and we're going to jump right into the meat or the content of this video here. Okay. All right, so first and foremost, the style of trading surrounds supply and demand. Okay, so you got to stop right here. If you do not know about supply and demand, I highly recommend that you learn it, understand it, really take hold to it. Because to me, I'm not going to say that there's such thing as a holy grail in the market, but you have to understand those areas where price is kind of moved away from quickly, which could be highly probable areas to where price will retrace back to them, and most times price will kind of react or fail at that point again, and you can look for a trade opportunity. You have to understand what's going on there, which we call supply and demand zones. It's not trading support and resistance, guys. There's a difference between trading directly support and resistance and supply and demand. So if you have not and do not understand supply and demand, I highly recommend you spend some time researching the material, whatever the case is. I have videos here on my channel that you can type in or query, just to kind of select a little magnifying glass from the home page and type in supply and demand, and it'll pull up those list of videos that you can actually take a look at, and I'll kind of walk you through and explain to you supply and demand and how I actually trade it and what I'm looking for and what I see, when I'm looking for those type zones. Okay, so again, supply and demand is the center of how I actually trade. The strategy of how I trade is something that I develop kind of using paired charts. All right, and paired chart entries to me gives you that extra means of confluence or confirmation. So if you are a newcomer who's watching this video today, and maybe you understand supply and demand, and you're trying to look for a strategy that you can use on a daily basis to allow you to profit and grow your account, then you found the right video. I appreciate you watching today. A lot of you guys who have probably already subscribed to the channel and been part of the community for a period of time, you've already picked up on the way I trade, or whatever the case is, and you moved over and joined our Discord community just as well, to where we as traders come together and talk about our entries, levels, and zones of nature, that type of thing on the Discord community. So if you're interested in joining the Discord, guys, the link is down in the description portion of this video. It is a great helpful and community to where traders have come together, and we talk about the way we trade. Pretty much, we share our entries and levels and zones of interest. We share trade entries. So you can also learn through other traders that trade. Not everyone trades exactly the way I do. There are traders on there who have their own strategies that they use, whatever the case is. But most of them understand the concept of supply and demand. So, but yeah, if you're interested in understanding supply and demand, then sit back. I'm gonna kind of go through a couple of examples today, covering the style of trading around supply and demand and the strategy or the scalping strategy that I use that actually helped me grow my account to where I'm at today. Okay, so we'll talk about a few entries here. I'll show you some things, and this first entry that I'm going to show you is from November the 11th, which was on Friday. Okay, so now this is a demand zone, and I'm just going to say this right now: supply is basically aggressive selling, demand is aggressive buying, and I make videos like this kind of regularly or routinely because I won't stop doing this because I want people to understand and grasp the idea or the topic about supply and demand, because and if you take the time to understand supply and demand, I can almost, like I said, guarantee you, but I can I'm not gonna say promise either, but I can tell you that you would see the reason why people actually trade supply and demand. There's no guarantee or promise when you're actually trading. It's all centered around trade management, and there are risks involved, so you have to understand that. So, but let's go ahead and talk about a few examples here. The first one being right here, this area of demand resting right here. And you may be asking yourself, okay, I don't know, I'm someone who doesn't understand supply and demand. Tell me what supply and demand is and why I see it right here. Okay, so take a look here. When price was making higher highs and higher lows to the upside, okay, it made a top here. It made a point where it's hot, where it reached a high point. But then it started doing what? Moving lower, okay? So I always tell people this: when price is breaking structure to the downside, it's creating or leaving behind areas of supply, okay? And it did that, okay? Started breaking structure. You say, what does breaking structure mean? Breaking structure was prices making lower lows and lower highs. Now on the move to the downside, meaning forming swings that are breaking support, coming down here, breaking support, breaking through key areas or key levels. And as it does that, like I said, it's leaving behind areas of supply. The key to it is really identifying areas where zones of either supply or demand are untested and leave what's called, to me, like a gap in the market. And I'm saying where there's an actual void there, but an area where price moved away from an area or created a swing and moved away from out of that swing pretty quick, and then not really returning right back to it immediately, okay? And then over some period of time, it comes back to it, all right? So those are what I classify as more or being more high probability setups. So in this instance right here, as price is making these lower lows and lower highs, what happens here, it must hit some area of support below, out to the left-hand side of the chart, okay? Which could also be an area of demand out to the left-hand side of the chart, and price bounced up or came up against. It's probably this little zone right here, I'm sure, okay, right here. So price made this low right here, all right, as it was making these lower lows and lower highs. Then it turns around and does what? It starts breaking structure to the upside. Breaking structure again means price taking out key areas, in this case here, of resistance on the move to the upside. And when it takes out these key areas of resistance, think about it. If price is taking out resistance or structure to the upside, it's leaving behind demand. If price is taking out support, okay, to the downside, as it's making structure to the downside, it's leaving behind areas of supply. Here we have an instance where price is taking out structure to the upside, leaving behind a zone or an area of demand right here. Now, what we see take place here is what, okay? Now, what I'm going to do is show you as a beginner trader, a newbie, that's someone who's learning to trade, the concept of everything of what I've shown since the beginning and using paired charts. Again, paired charts allows you to have more means of confirmation, more area of confluence, okay? So when price pushed up here, it took out resistance right here, took out structure right here, excuse me, to the upside, leaving behind this area of demand. And when price broke that area of structure right there, it did not retrace right back to it immediately. It took a period of time for it to come back. But once you have in this case here, an area of demand that you can actually mark off, because one, you have a structure break here. Two, it created an area of demand, but it also moved rapidly to the upside with these multiple green candles, which means there was a lot of power to the upside. When you see activity going on in the market like that, there's only one thing that, as a trader, someone definitely with experience, and I'm telling you guys this if you're someone that's new watching right now and you're new to trading, what that pretty much means that behind the scenes, behind the closed doors, the bigger powers that be, the banks, the institutions, they are filling orders quick. And when they're filling orders that quick, most all times they cannot fill all those orders. So as a retail trader, it's like we wait for that opportunity for price to come back to it and capitalize on it. So I mentioned price pushed up with a lot of force here, broke this area here, and you wait for a pullback to this area because it broke structure, leaving behind an area demand, as well as you had a nice gap in the market here where price didn't immediately return back to the zone. Now, when price does return back to the zone, you've already marked this area here of demand. So what's the next step that you actually do? When price pulls back to this area right here, this zone here, we're looking for to scale down to our lower time frame chart now, okay? This is a 12 range chart. If you are maybe a time-based trader or time-based chart trader, maybe you're using a 5-minute chart, maybe you're using a 15-minute chart. Either way, you've already zoned off your area of demand. Now we're going to scale down to a lower time frame chart. And you may be asking, well, can I just trade it off of the same time frame chart here, or a 12, me trading a 12 range chart, or if you're trading a 5-minute chart, can you? Yes, you can do that, but you have to be mindful of price action, what's sitting right below, right above you. My thing is trying to show you how to use pair charts together, using two charts together, because if you're seeing a area of demand off one chart, you scale down to a lower time frame chart, you do the repetitive process of what you just done off of the 12 range chart. Do the same thing on the lower time frame chart. You doubled up your means of confirmation. Moving over to the 4 range, if we do that now, I'm going to show you here. Now the 4 range could be like maybe you are, could be like your 1-minute chart, if you're a time-based trader. So this time zone here, or time area when price returned back to it, was at 10 o'clock. 10 o'clock here is right here in this time area. Now, right here where price broke up right here is that same area where price broke up right here, taking out structure, leaving behind that key area of demand. That demand area right here on the 12 range is that same area of demand off of the 4 range chart. So when price broke structure to the upside, okay, on the 4 range, it returned back to this same zone here, which is that 12 range demand, okay? Now, price returns back to that demand zone. When price gets back there, what are we looking for now? Same thing we just waited for it to happen on the 12 range. We're looking for a structure break to the upside now, okay? Same thing, just how we saw the structure break on the upside on the 12 range, creating a demand area here, looking for a pullback now to the zone. We're doing the same repetitive thing on a lower time frame chart. That's going to give us more means of confirmation and confluence in a sense, because when price broke structure to the upside, what does that tell us as a trader? It tells us that price is intentionally trying to make, on a short-term basis, move up to the upside and break higher, right? So we just wait for the pullback to that area and try to capitalize on a short-term run back up to a level or to an area price may reject or pause at, whatever the case is. So prior to you getting to that trade, you must understand what what price maybe its intentions may or intendedly try to go or move to. But let's get back focused here. So now that we tap into that 12 range demand zone on the 12 range chart, we're looking for the same thing to happen here. We want to see a break of structure. We want to see a demand zone created, and we want price to come back to it. The same thing that we just did and waited for on the 12 range to happen. Price comes back to that area, okay? Right here at 10 o'clock is that demand zone. Demand zone, okay, would have been right here. We look for the structure break, okay? Our structure break. If you pay attention to what really happened here, look here. Price made a low here, pull it back, made a lower low, pull it back, made a slightly lower low here. There's a small little area of structure right above this key area right here on the 4 range chart. Okay? Right, let's do this right here. Okay? All you do is wait for now for price to break structure to the upside. Okay? When it breaks structure to the upside, what is it doing? It's leaving behind a small area of demand on the 4 range now. So you have demand on the 12 range, demand on the 4 range now. Structure break. Okay? You see this green candle, green candle, green candle? Little push to the upside real quick. Leaving behind some orders. More than likely, when price retraces back to it, you get into the trade and you take it up to the next area where price could possibly pause it, or pause it. We'll leave it like that. Okay. So wait for the pullback right here. Now we're going to go ahead and mark off our demand zone here on our 4 range chart, which is going to be right here. Okay, right here. All right. So all we do now is basically waiting for a break of a candle to the upside. All right. Price breaks, this green candle here breaks above the body of this red candle, or takes that red candle out in full, meaning even the wick. Either or to happen, you jump into the trade. You get into the trade here at 52. Your aim is to take it back up the first area to take maybe your first level of contracts out, or the first couple contracts, it's going to be right here at the top at the back end right here where there's liquidity in a sense at where this little high right here at 54 3/4. Yes, if you get in here at say 53 or 52 3/4, you pick yourself up 2 points right there. But you try to hold your trade just as well. Some people say, well, that's only a point and a half, maybe 2 points. But you got to understand, it works if you test it and test it time and time again, okay? Because you're trading with double means of confluence, double means of confirmation off of 2 charts. You're using 2 pair of charts together, all right? And the thing about it is that you take your first couple contracts out at the high right here, get your 2 points, and then trail behind. Maybe you got another contract running. You switch over here back to your 12 range chart, and you're looking to see, okay, well, price has a potential or opportunity to at least even come up to this area here at 65 or 66 area. So even though we got out at 54 3/4 here, maybe at on 2 points, look to try to just as well to stay in the trade with the last contract or last couple contracts you have. Look at resistance above you and try to trail behind price to capitalize even on the greater movement and maybe get out at 65 or 66, okay? And then you probably picked up another, 7, 8, 9, 10 points possibly, whatever the case is, because it kept running to the upside, all right? So I wanted to share that with you today, especially if you're someone that's your first time viewing the channel here, all right? Again, I have videos on the channel where you can go watch and understand and pick up things about supply and demand. Do so. Watch a lot of the videos here on the channel, as well as you can go back and watch me trade around those areas of supply and demand on the videos that I have on the channel just as well, where I have my live recorded trading sessions where you can watch me actually trade, where I have traded live in the past. And I do this pretty much, several times a week. I used to do it every day, and I do trade live every day. It's just the fact is that I'm trying to now come up with a mix of content, meaning have more kind of, I guess, personal video content surrounding certain concepts or ideas or topics, as well as a few times a week I have my live trade recorded sessions where I post on the channel just as well. But I try to do that, mix that up so people get a variety of different content. But yeah, there's tons of videos where I have my live recorded sessions on the channel, and you can watch those. But that was an example of it. I'm trying to show you, especially as a new trader, someone that's looking to grow a small size account, and you're looking to use a scalping strategy that you can put into if you already have a strategy, maybe you do. Maybe you want to add this in and back test it and forward test it, see if it works out for you. I'm not pressuring anybody, forcing anybody to use a strategy. I'm just letting you know what works for me, and maybe it'll work for you just as well. Maybe even in certain situations, even on a maybe lower time frame chart, where you say, okay, well, I trade basically off of a higher time frame chart. More so, but I'm gonna try this and start looking for opportunities because the market's not doing too much today. Maybe it'll provide some scalping opportunities for you to be able to capitalize in the market. So use those paired charts together. Again, you can use like a 5 and a 1. To me, when I say that a 5-minute and a 1-minute chart, if you use time-based charts, I use range-based charts. People always ask me why. It's just the fact is that I've started trading this way with these type of charts, and the fact is that it just looks cleaner to the eye when I'm looking for setups. But it all surrounds supply and demand, and by doing so, using paired charts, it allows you, like I said, to give you that extra means of confirmation, extra means of confluence, and it almost in all solid situations allows you to be able to make some profit in some way or another, several points, a few points, whatever the case is. But profit is profit, and that's the way you grow a small size account to a larger size account. And I found it for me is just by scalping. I've never been one to really sit into a trade and allow it to like push up, and then I say, well, okay, prices went up 10, 20 points, whatever the case is, and price pulls back, takes those 10 points back away from you. That's how the market moves. So I like to take my profit in chunks, whatever the case is, at smaller increments, and look for multiple setups, and that's just my style of trading. And I'm not here to knock anybody's style of trading, whatever the case is. However you trade and works for you, I always say stick with it. But that's all I have for you guys in today's video. If you're interested in joining the Discord, I'll show you that right now as well, because I do this in every video. Here's our Discord community, and we are approaching, I believe, about 600 community members now. But with the Discord community, there's 2 channels pretty much set up. We have the general chat section or general chat channel where you can come and ask questions pertaining to the future markets, or maybe someone who's learning or in the process. You have questions about certain markets around, surrounding the future markets, come in. Go into the general chat section. Don't, feel free. No question is a dumb question. Trust me, because we all start from somewhere. You can ask questions, and someone will respond back to you. I'm sure if it's not me, we have, like I said, a solid group of community members. Now, if you're someone who's actually trading, and you're interested in joining us Monday through Friday on the trading floor, the trading floor is a channel that's set up for traders that are actually trading Monday through Friday when the markets are open. And again, we share our zones and levels of interest. Just a way to interact and share trade entries. Some people they get on there because they're like, okay, I want to be able to see and get an understanding of more so supply and demand and what people are actually, or what zones people are actually looking at when trading supply and demand. So again, if you're interested in joining, just follow that link down in the description portion of the video, Discord. Click on it, invite yourself in, and that's pretty much all I have to have today, guys. I'll see you guys in the next video. Tomorrow we got a new trading week coming up, and I wish everyone a successful week coming up in the markets. Take care and see you in the next one.